So, welcome, friends, for yet another enlightening session from Maruti Coaching. So, today, as we planned, we will go for how to crack the 30 marks of MCQ. So, we'll be close to doing around 75 to 100 marks or 100 questions on MCQs. The first 15-20 questions. So, what I will do is I will give you what could be the potential twist involved in the MCQ. uh, so how to interpret the same and how do you go about and post the analysis of the first 15-20 questions on how to approach. Then so what we'll do is we'll give you an 15-30 seconds time for you to answer the question. So first we'll read out the question, then you will get some 30 seconds to answer the question, and then we can suggest you that why you are right or why you are wrong. That's the kind of scheme of things which we have planned. So before we proceed to the session, so I have a great honor and privilege in welcoming N. Madan, Chartered Accountant, who's currently heading the tax of PwC. Uh, so I know him for so many years, and to become a partner in Suresh and Balaji, what I should do is I should start a firm. Suresh and Balaji should become a partner. But if you have to become a partner in charge of uh, most of the places of South India, you have to slog, you have to work, you have to move. Before he had a stint with PwC, he had other multinational firms. He has worked both in industry as well as in professional. And I know pretty well that how difficult it is to move forward in a big four unless you work hard. There's a strong measurement metrics are there, and unless you pass through that metrics, reaching this position is not going to be that easier. So somebody who has really slogged, somebody who has worked hard, and somebody who has moved up the ladder by sheer hard work, commitment, and knowledge. And that too, it gives me more privilege and honor because that is in the taxation field, and that always been a great happiness and privilege to a teacher. When you score 70 or 80 or 90, that's fantastic. But when you reach a very big stage in life using that subject, it even more sweeter. I always call it as first getting marks is a fish, and up in the career is a fishing net. I'm very happy that both fish and fishing net is with Madan. So I've asked him before we start the session to share his few thoughts about his experience and how he is able to move this quickly in the ladder in the taxation field. That too in a very highly competitive environment in a multinational organizations. Thank you, Madan. Maybe welcome to the show and maybe welcome to the session. And over to you for your few thoughts.
Thanks a lot, sir, for your kind words. And certainly, it's a privilege actually to be part of this particular session and share my thoughts actually. So, good morning to all of you. Though Suresh sir actually mentioned that he knows me for a long time and all that, that's probably the usual way that he actually introduces a person. But more than he knowing me, it is about he was my or he continues to be my mentor, and he actually taught me tax in my college third year as well, and he was certainly instrumental in me even getting into this profession. And to that extent, I would say I am always sort of indebted to him actually. As far as this profession is concerned, and specifically like what he mentioned about taxation as a subject, I have always sort of approached that subject with lot of interest and fascination, more than just getting that 60 70 marks in that subject actually. Certainly it gives a lot of happiness when we score good marks, but at the same time, I was also fortunate that in my internship as well, uh, more than 70 80% of my time was spent only in learning that subject actually, and getting into the nuances of taxation in terms of even preparation of some submissions before the tax authorities, appearing before some of the tax authorities on my own. The kind of, I would say, the knowledge and the opportunities that I would have got during that time really introduced me to that subject. And it's about 25 years since I have qualified. And I have not actually sort of lost any interest in that subject. And I would only say that every day the interest is only going up with the kind of complexities and the kind of opportunities that this particular subject throws up. And the time that I had passed out, as far as tax is concerned, people have to generally get into industry, and very few companies in Chennai at that point in time also had a specific, I would say, opportunity or specific position for tax. Tax was always subsumed with finance and accounts. Therefore, in Chennai at that time, there were about 2, 3 companies which were having corporate tax as a specific position. So I was more fascinated to get into that one of those companies and get on to my career. And as the liberalization took its stream, the big four multinational firms, they started opening up offices in several parts of India to help their clients and to get into the shoes of what we call it as a trusted advisor. So taxation gives that particular impetus, not in merely doing some computation, helping the clients get some tax efficiency and all that. Because if you look at the gamut of the work that taxation provides any professional to get in, is if you look at a company for that matter, right from incorporation of the company to ensure that the company capitalizes all its assets properly, to ensure because whether the assets have been properly capitalized or not will have an effect in the tax admissibility as well, in terms of whether it is depreciation, whether it is expenses before the commencement period, and all these other litigation areas. And then it gets into when the company is getting into the normal operations, the various accounting issues, and then the offshoot of that from a tax perspective. And whenever the company is to expand by way of inorganic acquisition, or if the company wants to demerge its operations, the company wants to go through some litigations, the company is ultimately getting into liquidation. Every single field, taxation has its importance. And today, if you look at
Madan,
the consulting field, yes, sir.
Madan, one second. I think there is some live feeding. There's some small இருக்குன்னு நினைக்கிறேன். Just அப்படியே ஒரு கொஞ்சம் 1 second hold on பண்ண just.
Sure, sure, sure.
Sorry, friends. I think though we were on the live for the last 10 minutes, but unfortunately, due to the settings have been slightly modified because I put the setting as you have to go through the link, but since some of them have not gone through the link and directly access the channel, they could not do it. But anyhow, we have changed the settings now. I think now we should be in a position to view it. Uh, so as already, maybe just to give you a small briefing of those for those who have missed. So before we start the program, so I've been discussing about how we plan to go about. So first 20 odd questions I will discuss about what is the intricacies of the question. Uh, so then I will guide you on how you should normally approach a multiple choice question. After that, what we will try to do is we will go by giving you, as already done, some 15 30 seconds for you to go through the equation, give your answer, and then I will give you the input on what went right or what went wrong for you in that particular equation. So this is basically the agenda for the day. And before we go to the program, I have uh, a very good friend of mine, a student of mine, and somebody who was in the taxation field has reached very great heights by sheer hard work, commitment, and knowledge. So it's currently heading the southern part of one of the multinational group, which is PwC on the taxation side. And for so many years, so he has worked hard on the subject. So to become a partner in Suresh and Balaji, you have to start a firm. But to become a partner in a multinational firm, you will be evaluated over a period of time by way of the performance. And Madan has done this in very short span of time. And apart from here, he has also worked in some other multinational firms. And I think definitely, I thought before we go to the today's session, a few words William will also know because he has seen. So I think he's cleared somewhere maybe around 20 years of experience he should be having. So he can specify the exact time. But he has actually moved in the life in that period of time. For you, 20 years, think about 20 years forward is going to be very difficult. But for him, it's very easy to explain because he knows how the 20 years journey has been. He has achieved it. For you, it's a budget. For him, it's actuals, real. So I thought before you start the session, a sharing of him of his experience will help us in the way in which you even go through the subject and the course. Over to you, Madan. Welcome to the session. Thank you
Thanks
for
a lot, sir.
very valuable time on a Sunday. I know how many calls you are taking every day, and taking a time off for us is definitely. I'm very happy. It's all yours now.
Thanks a lot, sir. Once again, good morning to all of you, and thanks, Suresh sir, for those kind words and introduction. And definitely, I wouldn't have been in this position but for him guiding me at the right time. I was a student in the third year of my college in Viveka back in 91. And then as per his recommendation, then I joined a firm where I got fantastic exposure in taxation during the internship period, where most of the people would have been probably doing audits of some companies and doing the ledgers and things like that. So I was so fortunate to get into preparation of tax appeals, appearing before some of the tax authorities and all that during my internship period. That actually sort of introduced me to that subject more than I would say the academics, and I think that really paved the way for me to be where I am today. And as far as that subject is concerned, I would say, so I passed out in 95, so it's about 25 years exactly since I've qualified as a chartered accountant. And I would say predominantly my stint is in taxation only, and the last 22 years at least, it has been only taxation. And the interest, I would say, only goes up on a daily basis about the subject, because of the kind of complexities that it throws, the opportunities that one gets actually looking into the budgets or the various, I would say, the judgments that are coming both in India as well as in the international arena. And with so much of liberalization opportunities that people have got, The opportunities are now not limited to tax computation for, because the moment we think taxation as a subject, which through which we actually do computation of taxable income, we help companies in getting some efficiencies. It is not merely about that. Taxation as the subject helps us in moving from a tax professional to actually a trusted advisor to our clients. Actually, that is where the journey, I would say, has um, uh, uh, taught me in the last 25 years. It is not merely about uh, approaching a client or the clients approach me for getting a doubt cleared. It is about every single business problem of a company. Uh, the company actually reaches out to people like us to get our views, because every single business issue will always have an allied issue from a tax perspective. Therefore, without consulting a trusted advisor, the companies do not move and do not take any step in that business, whether it is restructuring option, whether it is Karthikeyan administrator. Are you able to see me and listen to my? Hello.
Hello. Madan, Madan, you are able to hear you. I think, welcome friends, we have just lost this connection. So,
Hello.
yeah, Madan.
I think so. There was some technical issue, I believe. Therefore, we are now back on screen. Uh, so today, as far as this tax subject is concerned, my only piece of, I would say, recommendation for all of you who are taking this subject as one of the subjects in your curriculum, approach tax not as a mere academic subject, but whether it is I would say working for individuals, where you can actually plan the entire tax affairs of individuals, right from planning his taxes to even planning his estate duties, how his wealth has to be actually passed on to the next generation, taking all the tax issues of that individual, etc. When we move to companies again, it is right from incorporation to liquidation. If you look at the entire gamut of the phases that the company would go through, the tax professional always has an opportunity actually. And we are still talking about the corporate tax issues. The company, the moment it gets into transactions with its counterparts overseas, or even if there are transactions in terms of cross-border payments and all that, then we are moving out of the regular corporate tax issues to the international tax issues in terms of transfer pricing, in terms of definitely you would have all got exposed to the recent introduction by the OECD of the base erosion and profit shifting. So the entire action plan around BEPS, that's a huge opportunity for all tax professionals actually to understand the entire gamut of BEPS and work beyond the Indian corporate tax issues and all that. There are huge opportunities in terms of capital gains planning, and therefore people can be specializing into doing capital gain and related planning, the M&A related activities and things like that. And then there are GST professionals, there are transfer pricing professionals and all that. So the opportunities in the field of taxation, I would say, is immense. And in fact, so I after I qualified, I was in industry for some time. Then I joined one of the big four, was in KPMG for about some 3-4 years. I became a partner in 2008, so it's about 13 years since I've become a partner. So like what Suresh sir mentioned, it's a journey which is to be experienced. And in a big four multinational firm, it is mainly about the contribution that a person is able to deliver on a year-on-year basis. So it is not like in 1 year the person has performed. Therefore, his stint and promotions and all that are guaranteed for the next 5 years or 6 years. So even after the person becomes a partner and he enters a cabin, so we always believe that the place has to be earned. The seat of partner has to be earned. So even after that happens, every year it is an interesting journey that the person has to go through, prove based on his performance and all that. So that way, I think it's a wonderful journey. And we also have, in fact, I've forgotten to mention one of the very important, I would say, the facets of taxation is about the litigation itself. The person can actually get into the area of litigation, and then he can go up to tribunal if he is only a chartered accountant. But if he also gets into a legal background, then he can actually move up to the Supreme Court to advance his arguments and things like that in the field of taxation. And I can tell you, in the field of taxation in India currently, there are less than about say 15 to 20 acknowledged tax professionals. So there is a huge vacuum in this particular area, and we all know that we have the first mover advantage. Therefore, instead of just crowding a place where there are already some thousands of professionals, a field where there are only limited number of professionals, it gives a lot of I would say space for us to operate also. So and I would say just to conclude, more than the hard work that he was talking about, more than the opportunities that this particular subject throws and all that, we should also have, and that is something that I have practiced. We should always approach that particular subject with a lot of interest and humility. That I still feel that whatever that I have learned in taxation is only about say 5 to 10%, and there is more and more to learn. And when we approach with that particular mindset, it really actually throws up a lot of opportunities. And it's very fortunate that all of you have got a fantastic teacher in the name of Suresh, because one is to get a person who teaches a particular subject, and there is another person who is not a mere teacher in terms of teaching that subject, but also guides you the entire journey of yours to emerge as a successful professional. And I have seen him right from 91, and I have got immensely benefited because of his thought process, the guidance, and all that. And over the last several years, I have actually come across several professionals who have got benefited through him. So you have been so fortunate to have him as your guru, I would say. So even from that perspective, I would say when most of you have taken this subject, this particular profession, because of a particular ambition to become a successful chartered accountant and all that, I must tell you that I never had such ambitions in life. I just wanted to get into a government job, and went to Mr. Suresh to just tell that I am getting into a particular aspect like that in my life, in terms of getting into some post graduation and all that. I never wanted to do CA, and he actually sort of showed me the path in terms of how I can actually sort of prosper in my life. So if a person who never had ambition can actually come up to this level in 25 years period with the light shown by a person like Suresh, if you people have ambitions, and definitely I'm sure that you can actually reach much more greater heights in much lesser period, is what I would actually say. Again, wishing you all success in your professional career, first of all in your exams right now, and then to reach great professional heights. Actually, that's what I would leave the thought with you. Over to you, sir.
Thank you,
Thanks for the
Madan.
opportunity.
There are a few questions have also been asked before I go to that question. So one thing is that despite reaching this much amount of heights, I want to share one thing with all of you that every September 5th and every Vijay Dashami, uh, you can be rest assured there will be always a call will come from Madan. So even if it is at sometimes it even used to come at 11 o'clock in the night, sir. I had so many calls today. Don't think I've forgotten. Somehow I thought I should do it, and so therefore, so always now it's sometimes it's very easy for people. It's just a question. That's how most of us view. But I think not even a single Teachers Day or Vijayadashmi has gone without Madan calling me. So that's a kind of remembrance and gratitude he has always got. Sometimes it's fantastic in life to see people don't forget us. So that's the thing. So now Karthik, there are a few questions have come plus whatever questions you have. Karthik is Madan incidentally it's a very interesting character. So in the first class I used to ask them, so, who do you like the most? Obviously, referring to some actresses, which one? Like, he said, my first wife will be Tax. That was one of the very
Okay.
surprising answers for me. So, in fact, I used to tease him whenever, in some days, if he's suppose if he's not very active in a class, I said, no, எனக்கு wife ஒன்று திட்டிட்டாங்களா அப்படின்னு. So, or why you didn't like your wife today? So, it's part of life. Wife sometimes will be very this thing. Sometimes they also go through some moods. Don't worry about it. They will always be behind you with this. But both me and Madan are always great examples of how women are behind our success. Sometimes most of the times we are not available for them in the house. And even today, would I see uh, today on a Sunday also sometimes like since yesterday I've been preparing for this and she has done the our office has resumed. She is taking care of our audit division. So she has been doing bank audit and she came only on Saturday, thinking that I would be spending some time with him. But unfortunately, she knows that I have some other commitments and said, "Don't worry, that's how life goes on." I think even for Madan, I'm sure that most of the time, I know his wife also and his family also. I think so they have sacrificed a lot. So therefore, in every it's absolutely true for every success behind every man there is a woman. And there is no doubt about it. And both of us are privileged to have it and also share it on any this thing also. But Karthik already has a wife in the name of Tax, and I think so there are a few questions, Karthik. You can apart from your any question you have, you can just quickly put some questions to them because all of them at least some 3 4 questions are there. So you can just quickly put the questions to Madan sir to just have this view on the set.
Sure, sir. Sir, your speech was extremely awesome, sir. So we have few questions from students, sir. So if the
Okay,
direct tax
sure.
code direct tax code is implemented, how will it change taxation as a career?
First of all, direct tax code, if I remember, it came in 2010, and whatever uh, good of, I would say, whatever complex things that came in the direct tax code in terms of, I would say, the control foreign corporation related issue, etc. So some of them have already started coming in the act itself. Number one, and number two, the if direct tax code the way it was announced in 2010, if that is implemented, tax professionals need not be worried for the next say 50 years in terms of the litigations that it will throw, and the opportunities will be immense actually. And you all are aware about the general anti-avoidance provisions which have been enacted from 2017 or 18, and the opportunities are only going to be more immense with those kind of things, I would say. See, if
Madan,
you take a simple, yes sir.
Madan, I think he is asking about the latest accumulation engine report rather than that old direct tax. I think
Yeah,
that
yeah.
is.
So in my view again, with the kind of I would say even the new report that we are talking about, coupled with the opportunities related to the BEPS, what I told you, and the general anti-avoidance provisions, whatever simplifications that we are talking about in the regular corporate tax, because see, when I started the career, it used to be always about more than tax practice. It used to be called as a fax practice actually, because clients will actually send an opinion in terms of how to go about a particular issue, and we give an opinion, and that's how we used to make our money. But in today's context, it is not about merely getting an opinion. It is always about implementation of a particular structure. So, however simplified the laws are going to be, the real issue is about how do you really implement a particular thing. Whether it is take a very simple case. There is a new tax regime which has now come that gives an opportunity for companies to get a 22% tax regime, right? And this is for new company, and that there is a 15% regime also for companies if they are established after uh, 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 October 2019 also, right? Now
Yes,
I
sir.
have a case where the company is established in 2018. The assets have been just bought, and the company is still not capitalized the assets. The plant and machinery is not been installed. The commencement of operations have not happened, and this is in a particular sector where the company will definitely take about 4 years to even set up its operations actually. So the question really comes that what the government intended to do, it wanted to attract investments, and therefore it gave a particular new regime. So should it actually deny or decline to another company just because the date of birth was earlier, but nothing has happened after that actually? So it definitely gets into an area of litigation. So like that, every single thing I would definitely see it as an opportunity rather than so till such time they say that instead of taxation, whatever transactions that you do through bank, there will be a 0.1% tax. If that be the case, then probably we will have a scary moment.
Yes.
But other than that, whatever modifications or amendments that they are doing, we are still confident that we have our life secured for another 50 years in this profession itself, minimum.
Oh, okay, sir. Sir, so that was super, sir. Then we have one more question, sir. That is, the limit of tax audit is actually being increased in every budget. Do you foresee in the future that the tax audit will be removed completely? If so, yes, how will it affect our profession?
So again, um, it will, in my view, it is a simple complaints that some of our professionals are doing, irrespective of whether the tax audit form is done by a chartered accountant who has completed CA in say 2 years, 2 years ago, or if it is done by a very big firm of chartered accountants. How the tax authorities view that, Suresh sir knows it better. That is only a piece of information that the tax authorities get actually, and it only gets into more and more questions and debates that results in the tax assessments. Though, therefore, the tax audit, I would say, is only a very, I would say, it's a fraction of the work that the professionals are doing, and therefore we need not be worried that if the limit is increased, then what will we do, etc. There is enough and more quality things that can be done rather than merely compiling information from the financials and then putting it in the tax audit report. That's what I would think.
Okay, sir. Sir, so this is my personal question to you, sir. So, what do you think students of that is our current generation should develop, which you or the before generation was having and we do not have it, sir, in the field of
I think
taxation?
no, today you have phenomenal advantages in terms of whether it is the live lectures of so many people and access to so many I would say literatures that are available across the globe to enrich yourself in the field of taxation. Therefore, I don't see you are at any kind of disadvantage. Probably the only thing that I would say is you have put it so very openly that tax is your first wife. But probably whether it is me or Suresh sir, we wouldn't have told that. We see even okay. I will put it differently. We probably might be breathing tax in and out rather than just having it as wife, because wife at least at some point in time she has to be away from us and things like that. but we can't live without breathing. So probably that is something which I can tell you as a piece of recommendation. If you have to be successful, you have to just breathe in and breathe out, because if you don't breathe, you are dead. So if you take tax as that, then probably your life can be more successful as a tax professional.
Oh, okay, sir. Sir, then I wanted to ask this question, sir. So, how your articleship period actually enriched your interest in the subject and in academics? How it was useful to you, sir, and how to make use of it?
See, again, it's an opportunity that I got where most of my time was spent only in taxation. Okay. And it was again not taxation of companies and all that. I was doing taxation of a lot of individuals, partnership firms, etc. And there were also quite a bit of interesting Binami transaction related cases and all that, which I would say 9 out of 10 article students would not have got this kind of opportunity. Therefore, I was quite fortunate. But the point that I would say is, even today, therefore, my point is, uh, let people not be worked up whether they should get articleship only in a field of taxation or not, because even if they are getting in to other fields, whether it is statutory audit or other bank audits or even regular kind of work, etc., which is still fine, as long as we are able to approach the subject with, because even when we interview people, I have always found that people have interest in taxation because of the everlasting changes that happen to the subject actually. And what we were advised when we were doing this subject was, when you look into a particular section, don't look into the section uh, from a ready reckoner, or even if you are looking at it from a statute, which is Income Tax Act. Get into the genesis of this section, why the section was introduced actually. And if there is an amendment, just go to the earlier act, whenever it got amended. In fact, my principal used to ask me to get into the loft to look into the old book, just to get a glimpse of how the section was at that particular point in time, etc. And it is always about, right from the introduction of a particular section, how the journey of that particular section has moved from one level to another level. So if we get into all these practices, and if you look at a particular judgment, don't look at a judgment and then apply a law. You first of all get into genesis of a particular section, why that section was introduced, and then apply that particular logic to a case law. And even when you are reading a case law, the kind of case laws that are coming up every day, I would say, when you look into a case law, don't form an opinion, just get into so many, I would say reading is the key. That's what I would say. Therefore, even on a particular aspect of, so if you take permanent establishment as a particular issue, so don't restrict yourself to reading one or two judgments about that particular topic. You have to read right from 1922 Act to look into how that concept of permanent establishment has been there in the Act, and how the jurisprudence has evolved in that particular subject. Right from, I would say, a judgment of Annamalai Timber, where they said, if you sign a contract, then 10% of the consideration can be taxed in India. From there to whether it is Formula One, it has seen a huge, I would say, journey. So if you are going to read only Formula One, if you are going to read only Vodafone, that is not going to help a tax professional actually. For you to be, so it can probably help you in securing good marks in the subject. But if you have to emerge as a tax professional, unless you start from the basics, and to that extent, I would say you have to put in the hard work.
So, sir, that was actually good, sir. But I just want to bring to your notice that TG sir is actually teaching that way in class itself, sir. In Marathi
Correct.
coaching, the way he imparted the subject into me, or the co-friends of mine who did the subject with me, he actually was starting from the inception of the section and how it got evolved and what was the things which were explained in the memo and how the judgments came, what are the conflicting judgments. So I just started, I wanted to share this to you, sir. Thank you, sir.
Absolutely, absolutely. In fact, we all have got benefit because of that. So he used to actually give. So if somebody is coming from a remote part of Chennai, he will immediately say that he will immediately relate that person to 80HH or 80IA because of a backward district and things like that. So he will not actually call that person by his name. He will say 80IA has come to the class today. So even today, we actually call him as 80IA. And if a person is acting in a very funny way or whatever it is, we actually say 80U has come. So for us to remember, and unfortunately that guy has lost his name even after 25 years. We actually call him as 80U rather than Balaji. So that way he has always made the class lively and relate any of these issues to taxation actually.
Okay, sir. Okay, sir.
So thanks, Mithun. So thank you very much for sparing your time on a Sunday. So of course today, of course, all of us don't know whether Sunday or Monday unless somebody is. So for the first time, Monday will be very happy that it has not been cursed. It looks like that.
Correct,
So
correct,
yeah,
correct.
thank you very much for the
Thanks a lot,
time
sir.
and. So we'll try to catch up because a lot of questions have come that people are asking about what do you think about Go. Maybe we'll try to have a separate session on this because I think this section, since people are also looking for the 30 marks also, at the same time, we should not lose sight of that also in the process. Having
Absolutely,
said
absolutely.
we are not that exam savvy, but still, having said, but thanks for your wonderful insights into how your journey has been. So it's been a pleasure listening to you.
Thanks a lot
See,
for the opportunity, sir, and always a pleasure to interact with you all. Thank you. Bye.
thank you. Bye.
Thank you, sir.
So, right, friends, it's time because I have few questions are there, and we will try to take those questions to him subsequently. And maybe as the moment has come, we have been waiting for quite some time on this. So let's. So as I said, the first. So first few questions, what I will try to do is. So what I will try to do as far as a few questions are concerned, try what has been tried in that particular question. So how do you normally try to crack those questions, and then maybe give you some time. So maybe like another 45 minutes or so, I will go through the questions. You need not have to answer these questions. Maybe first few questions, I will tell you how to go about. And thereafter, we'll give you some 15-30 seconds for you to try so that it also gives you a joy of answering the question. Then I will make a comment on why it's right and why it's wrong. So this is the first question. So Mr. A was working with XYZ Limited. He died on 30th September 2018. So after the death of him, Mrs. A is receiving pension of 15,000 per month from the company. The amount taxable in the hands of Mrs. A for assessment date 2021. So typically the way in which I would like you to approach this particular question is out of the four choices you have. First, rule out the choice first. So now, since the pension is paid to his wife, it cannot be taxed under the head salaries. Therefore, straight away option B goes out of reckoning. Therefore, it should be either A or C or D. So definitely cannot be B. So that means you are now, instead of 25%, you have now reduced it to 33 1/3%. So that's the one way of approaching those. The second point is that, so since he died on 30th September 2018, so immediately our mind makes a calculation of 6 months into 15,000, 90,000. So that's how possibly our mind thinks. But the question is for assessment at 2021, for which the previous year is 1920. So that means Mrs. A has been receiving pension for the full year and not 6 months. So once you understand this is going to be for a full year, so now straight away option A and option C goes out of the system because 15,012 is already 1,80,000. So So since A and C has got an answer of 90 and 75, they straight away goes out of the reckoning. So again, you won't even have to think about anything else, because even though you are having an answer of 1,80,000, that itself is not there in the option. That answer is 165, because there is a 15,000 rupees of standard deduction is available for family pension taxable under income from other sources under section 57 of the Income Tax Act. Therefore, the answer for this question is 165. So, but however, most of the people are likely to narrow down this answer between either 90,000 or 75,000. That's where we are just trying to divert your mind and then give a slightly different answer. In fact, that's most likely people might rule out 165 and then think about whether it's 90 or 75. But actually, the ruling out has to be 90 and 75. That leaves 165. You can blindly answer 165. The 165 is a breakup of 180 minus 15,000. 1,65,000. So this is about the first equation. So likewise, few questions I will take you through. So Mr. X has let out the property to Mr. Y on a monthly rent of 50,000. The fair rent is 1 lakh. Mr. Y sublets a property to Z on a monthly rent of 60,000. Property taxes amounting to 20,000 was paid equally by X and Y. So this is another very interesting question. So in order to come under income from house property, the assessee must be the owner of the house property. And if you are not the owner of the house property, then the income will not be taxable under house property, but instead it will be taxable only under income from other sources. So therefore, in this particular equation, whatever income derived by X will be taxable under high HP. Whatever income derived by Mr. Y will be taxable as income from other sources. Right, that's the first point. So just find out this in the option. A, 833 IHP, 74 will be IHP in the hands of Y. So for that, you can eliminate. So then you have IHP and IOS, IHP and IOS, IHP and IOS. Therefore, first option you can remove straight away will be option 1, which is both are house property, but definitely in the hands of Y, it cannot be house property. It will be income from other sources. That's 1. So therefore, you are now left out only with 3. So now, if you go in that 3, but it's more easier for you to take the income from other sources part of it for a simple reason. In income from other sources, you pay tax only on the basis of actual income subject to deduction of actual expenses. For example, if you take the case of Y, he gets income of 60,000 rupees per month. He pays X a rent of 50,000. So again, bear in mind, income from other sources, you have to pay tax only on the actual income. So 60,000 minus 50,000, which is the monthly rent. And then that comes to 10,000 per month into 12, that comes to 1,20,000. Less municipal taxes paid by Y, which is 10,000. So 1,10,000. So therefore, for Y, 1,10,000 should be taxed under income from other sources. So as a result of this particular point, so option C goes out of our discussion, because for Y, the amount of income taxable under income from other sources has got to be only 1,10,000. So therefore, in option C, we have 820. So that gets out of the system. So that means we are left out with only B or D. Now, if you go to house property, the taxation is only on the actual rent or the fair rent, whichever is higher. So you have a fair rent of 1 lakh. If you multiply that, that itself comes to 12 lakhs. You don't have to make any calculation at all, because in option D, you get 4,13,000. Straight away, that cannot be in the system. So 12 lakhs, all of you know there is a standard deduction of 30%. There is a property tax of 10,000. But one mistake we should never try to do is, don't try to exactly arrive at the number. See here, 413 cannot be the answer, right? 12 lakhs is your expected rent, which is the gross annual value. Then you have a municipal tax of 10,000 be deducted. It's 1190. So how can the answer be 413 even after the standard action? See, in the multiple choice question, you never need to get the correct answer. Even in the previous question we discussed about, you don't have to get 165. The only point is what you have to understand there is that there is other 2 options are not possible. So don't try to get the exact number in an MCQ. Then you will not be in a position to solve this 30 MCQs in about 54 minutes of time which is allotted to you. So therefore, just we can, by hindsight, you can tell why option C, D cannot be there now. Having closed the other two options, you're left out with the other two, and then you can freeze on B on account of this reasoning. Don't get 833. No need to get 833 at all. So that it cannot be 413, therefore it has to be 833. Right? So that's about the question number 2. So A Limited is engaged in the business of leasing. It leased out a motor vehicle to B Limited, which is engaged in the business of running it on hire. The car was acquired on 25th August 2019 and put to use on 4th October 2019. Depreciation can be claimed by A Limited at 30%, B Limited at 30%, A Limited at 45%, B Limited at 45%. So what I have tried in this particular question is to mix a couple of points. One is the new rate of depreciation for the motor car, right? That's the first one. So if you acquire a motor car between 23rd August 2019 to 31st March 2020, you will get a higher depreciation. So you will get a higher depreciation of 45%. Now, the only question is, maybe I had a interesting option of putting it as 22.5%, 15% also. But I decided somewhere, since we already discussed enough in our early discussions, this being a leap year, you should think of 4th October 2019 as a cutoff date. So therefore, I am not thinking in this particular question on 50% applicable rate, because we had a lot of times in the past while discussing about this, discussed about the leap year for May 2020 and November 2020 examinations. Since this class, I think, since a lot of you are familiar with my discussion over a period of time, the importance of 4th October or a leap year for this particular examination, I must honestly confess that I am not trying on that particular point. But others who have not listened to this particular point, you are to watch out on that. The examiner could also add the twist to the question by putting 22.5 and 15% also. But I have not done that because I thought most of you by this time have registered strong in your mind that cutoff date is 4th of October. So now let's move on to this particular question as to what I have tried. So in the case of the business of leasing, who should get the depreciation is the question. Should the lessor get the depreciation or the lessee get the depreciation? As Accounting Standard 19 also says that in case of financial lease, the depreciation will be available only to the lessee. But what about income tax? So in income tax, one, should the lessor get depreciation or lessee should get depreciation? That's the first point. The issue is already clarified by the board, and is also, we also have a Supreme Court decision on this particular point also, that the depreciation as far as income tax is concerned will be continue to be available in the hands of the lessor only. That means A Limited, which is engaged in the business of leasing, being the lessor, will be entitled to the depreciation. Now, so what is the income tax department's contention here? The higher rate of depreciation for the motor car is available only for an assessee who is engaged in the business of running it on hire. So the assessee must be engaged in the business of running it on hire. So since the depreciation here is available only for A Limited, A Limited should get only the normal rate of depreciation one, which if you are into the leasing business, your normal rate of depreciation should be provided, which for a motor car, the normal rate of depreciation will be 30% if it is acquired between 25th August to 4th of October. I mean, if you put use before 4th of October. Alternatively, so the assessee's contention here will be, even if the lessor is getting the depreciation should be based on the end user of the asset. The end user here is the lessee. Since the lessee is using the business of running it on hire, the lessor who's entitled to get depreciation should get depreciation at the higher rates, is the assessee's contention. So when the matter went to the Supreme Court took a stand that once the lessee is using it in the business of running it on hire, the lessor will be entitled to higher depreciation because the higher depreciation is provided because of the higher wear and tear of the asset. So therefore, the Supreme Court took a stand that one lessor will be entitled to depreciation, two at the higher rates. So therefore, one A limited is engaged in the business of leasing. Therefore, you can straight away knock off the two answers of B limited. Lessee will not be entitled to depreciation. If you are not strong in accounting standards, it's very easy to answer this question. Then we have to choose between 30 or 45 whether A limited should get depreciation as normal car depreciation, or will A limited also get the high depreciation? For the reasons already mentioned, A limited, the lessor, will get depreciation based on the end user of the asset, which is the lessee is using it on hire. Therefore, rate of depreciation will be 45%. So eliminate one, B limited, and then choose between 30 or 45, but you will get depreciation at the high rates. Now, this is what we are trying as a question. If you see all the three questions, we would have tried something as a twist. So therefore, ideally what you should try to do is you should try to eliminate and then also apply rationally. In fact, that in that way it will be very, very helpful for you to appreciate the MCQs in the examination. So in the case of a manufacturer set up in a notified area of Andhra Pradesh after 1st April 2015, the additional depreciation on building which is put to use for less than 180 days will be. So whether it is 35% or 20% or 17.5% or nil. It's a very slightly interesting question. So maybe like for those for a split second I've not missed the total video. You could have even got the answer problem of animation, where sometimes if I press my mouse one extra time, the answer pops up. I don't think in examination you will have this advantage. Here is a manufacturer set up in a notified area of Andhra Pradesh, and it is after 1st April 2015. Therefore, additional depreciation will not be at 20, it will be at the rate of 35%. So therefore, we will be rushing to answer this particular question because it's a human tendency for you to, when you find a question which is a little bit more easier, we will always would like to rush and answer the question. So 35, 17.5 just will rush. But however, if you just closely look at the question, the depreciation in this particular case, additional depreciation will be zero because the additional depreciation is available only for plant and machinery. It is not available for building. So that's the catch here. So 180 days, Andhra Pradesh, notified area, less than 180, mine just gives you 17.5, but it is on building. That additional depreciation is not available on building. So therefore, before you just press an answer, just think for a second. That is the beauty of MCQ. So that's a very interesting question here. An LLP has incurred expenditure of 100 lakhs on in-house R&D other than land or building. What will be the deduction available to it in computing its business income? So in-house R&D 100 lakhs, 35 2AB. So we'll provide for you to claim the deduction. So normally again, once you know the 35 2AB is 150%, the equation also talks about other than land or building. So therefore, immediately what we will try to do is give the answer as 150 lakhs. But the deduction under 35 2AB is available only for a company. Now, since the deduction is available only for a company, the weight deduction to 35 2AB is not available for a limited liability partnership. So LLP will not get 35 2AB. Since LLP is not eligible for 35 2AB, all R&D expenditure under 35 2AB, all 35 2AB is eligible for 35 1, even though the vice versa is not true. But since 35 2AB is available only for a company, not for an LLP. So deduction will be under 35(1) only, and therefore you'll get only 100 lakhs. So, so again, like I'm sure that some of you have already answered, push the button of 150, because R&D other than land or building, just you press the button is 150. And now, just as I said, don't worry about making a mistake now. Don't worry. This is the best place to make the mistake. So you press the button, not a problem. Just keep doing it. But that's a bit of an anticlimax. Again, the twist here is that assessee is a limited liability partnership. So you will not get weighted action. In fact, I could have added one more option of 0. So yeah, sometimes in multiple choice, we also get a lot of choice. So I could have added that an amount of 0, but which I have not done. That is something pretty interesting. But however, the answer is 100 lakhs. But examiner also got multiple choice to frame equation. As I said in the previous question, we could have added some more dimension there. So just have a close watch on this. Next time I go to another one. A Limited paid 35,000 by cash to a transport operator operating 5 light commercial vehicles and having a ban without reduction of TDS. Amount to be disallowed while computing its business income will be 35,000 under 48.3 and nil under 40 IA, 35,000 under 48.3 and 10,500 under 40 IA, nil under 48.3, 10,500 under 40 IA. So nil under both the sections. So since all of you have already started trying the answer, so maybe let me see that will. So now suddenly there is some stoppage in your answering. Right. So now let's again go to this particular point. For transport operators, 48.3 limit is not 10,000, it's 35,000. So therefore, you can eliminate option A and option B. Eliminate both option A and option B first. Right? So that is for, therefore, it will not be A, it will not be B. So that means we are left out now with like a KBC programmer, you have now come to 50-50. And the Mari we have come. So once you come to that 50-50 stage, it should be either C or D. Now, so whether it is 10,500 and the 40 IA or not. So now contracted TDS is required under section 194C of the Income Tax Act. Under section 184C of the Income Tax Act, if the transport operator owns at any point of time 10 or less vehicles, and if he does not own more than 10 at any point of time, and if he has got a PAN number, and if these details are furnished by him to the deductor, then 194C will not apply. Now, so for which you should have a PAN and your number of vehicles should not exceed 10. Then TDS provisions will not apply to you. Now, since TDS provisions of 194C is not applicable to you, so the question of deducting tax under 194C does not arise, and as a result of it, 40A IA also will not apply. So therefore, so the correct option will be option D, which will be nil under both the sections. So eliminate A and B, stick on to C and D, and then decide. So in that way, the chances, the probability of you getting it right are very, very bright. So now we'll just go to another one. So from business income, if the assessee offers income under section 44A, he is not eligible for claiming any deduction under 30 to 38 except interest and remuneration under section 40B. But set off chapter 6A deduction and rebate under 87A are available. Not eligible for claiming any deduction at 30 to 38, including interest and remuneration, but set off chapter 6 deduction, rebate and 87A are available. Not eligible for 30 to 38, set off and losses, chapter 6, but eligible for rebate and 87A. The last one, you are not eligible for anything. So the reason why this question is pretty tricky in the examination, you have a three presumptive income sections of 44 AD, 44 AE, and 44 ADA. So all the three sections have one thing in common. They are all presumptive incomes under the head profits and gains from business or profession. Please understand it's at 8% or 6% or the 7,500 or 1,000 rupees per ton or 50%. All of them are under business income. So as a result of it, obviously set off chapter 6A and all will not be prohibited because of the fact that it's not total income. It's only business income. So therefore, you can straight away eliminate those options where which says chapter 6A is out not available. So option C and option D talk about you don't get any deduction under 30 to 38 or set off or chapter 6. Therefore, just eliminate those two, C and D. So we can straight away remove that because these are all only under business income. Therefore, they cannot restrict the other chapters. Now coming back to the first two, in 44 AD or 44 ADA, the sections specifically provide 44 AD and 44 ADA specifically provide that you will not get interest and remuneration, or they don't get deduction for interest remuneration. But in 44A alone specifies, though 30 to 30 is not available, you can still claim interest and remuneration if you are a partnership firm. So therefore, only option A specifically talks about not eligible for claiming deduction except interest and remuneration, but set off chapter 6A rebate and 87A are available. So therefore, once you eliminate the last two and raise it only to the first and second, if I'm going to change the question, if the assessee offers income under 44 AD, then the option will become B. If I say 44A, it will become A. That's a small twist which you are trying. Only in 44A, the interest and remuneration is allowed only in 44A. So whereas for other presumptive incomes, you don't get 44 or for even 40B deduction. So it's all about eliminating and then proceeding. So that's what you should always understand in a multiple choice questions. So the correct option is A. So Mr. A purchased 1,000 shares of XYZ Limited unlisted on 1st January 2015 at a cost of 1 lakh. The company allotted bonus on 1st July 2017. The bonus shares were sold on 1st July 2019 for 3 lakhs. The tax implications on sale of bonus shares is 3 lakhs of LTCG, 3 lakhs of STCG, 3 lakhs of LTCG subject to indexation, 2,50,000 of LTCG subject to indexation. Again, we will try to eliminate the answers. So this different way of eliminating this. The first issue here is that whether the capital gains is short term or long term. So now you have 12 months holding period. You also have 24 months holding period. You also have 36 months holding period. So we have in the question the shares are unlisted. Since the shares are unlisted, it will come under 24 months category. So it is not going to be 12 months. It is not going to be 36 months. So we'll go by a category of 24 months. Now 1st July 2017 to 1st July 2019. So So now with the once you are at 24 months, the only issue is that 1st July 2017 to 1st July 2019, the assets are exactly held for 24 months. So now the only question, what should I do with 1st July 2019? Should I have to take or should I not take? So now the law says long-term capital asset is one which is not a short-term capital asset. And short-term capital asset in the respect of unlisted shares is one which is not held for more than 24 months. That means if you hold for more than 24 months, then it will become long-term. But the only question what the department is saying, that 24 months should be 24 months plus 1 day. But the law never said you should hold 24 months plus 1 day. Suppose if somebody holds 24 months and 1 minute, it's more than 24 months. Even a minute about 24 months is more than 24 months. So therefore, the Delhi Court took a stand that even if the asset is held for more than 24 months by a minute, by a minute, it is only more than 24 months. So it is 24 months, not more than 24 months short term. 24 months by even by a minute will be considered as more than 24 months, and therefore the capital gains becomes long term. Now, once the capital gains becomes long term, the cost of acquisition is zero. So therefore, even if your index is not going to be of any relevance, therefore the correct option becomes option A, which is a long-term capital gains of 3 lakhs. So if you're given the answer as short-term capital gains as 3 lakhs, not a problem. It's a good answer. But the only problem is that's always what we try in an MCQ. Just that small twist. Just that small twist. So that is what is going to make and small adjustment. But I still believe that you should keep trying your answer. Don't worry about making mistake. The mistake is the best way of learning the subject. So 3 lakhs again will be a long-term capital gains. And to simplify this in the examination, both date of acquisition and the date of sale both will be considered for the purposes of determining short-term or long-term. So we'll just move to the next one. A sum of 50 lakhs was claimed as exemption by investing in a residential house costing 60 lakhs under section 54. This new house was sold after 26 months for 80 lakhs. The capital gains is short-term capital gains of 20 lakhs and LTCG of 50. Short-term capital gains of 70 lakhs. Long-term capital gains of 80 lakhs minus indexed cost of 60 lakhs. And of course, in option C, you can also add an STCG of 20. And option D, a long-term capital gains of 80 lakhs minus the indexed cost of 10 lakhs. So this is a very interesting question. This, once again, we have been trying to represent the government on account of a mismatch between short-term, long-term definition and holding period required for the purpose of violation of section 54. Earlier, a building or land will become long-term only if they are sold after 36 months. Now section 242 specifically provides a land or building will become long-term if it is held for more than 24 months. So therefore, there is a change from assessment year 2018-19 in the holding period of land or a building. But in section 54, you should sell a house and you should buy a house, and the house you buy should not be transferred for a period of 3 years. And these 3 years were earlier kept by the lawmakers because 3 years is a period which you have to hold earlier for the asset to become long term. Once you change the holding period of the asset, from 36 months to 24 months, logically what it should do is you should also change section 54 series also. But unfortunately, section 54 continues to say the lock-in period is 3 years, even though 242A specifically provides the lock-in period is only, or short-term, long-term is only 2 years or 24 months. So therefore, there is a very peculiar situation which is going to develop now. If you claim exemption in section 54, and if you sell that asset between the second and the third year, so the capital gains will be calculated differently there. So as per section 54, the cost of acquisition will be reduced by the amount exempt from tax in the section 54. The section never says your exemption is withdrawn. So therefore, what is going to happen as a result of it is your cost of acquisition will have to be reduced. The cost of acquisition is 6 lakhs. Exemption claimed is 50 lakhs. Therefore, that exemption will be reduced from the cost, which is 10 lakhs. And a house sold after 24 months is long term. And therefore, the correct option for this particular equation is not A, not B, and it will be long-term capital gains of 80 lakhs minus indexed cost of 10 lakhs, which means the option D will be the correct answer for this particular question, because a house will become long-term after 24 months, whereas in 54, we continue to have the exemption withdrawal up to 3 years. As a result of it, if you sell the asset between second and third year, The capital gains will become long term, but the cost will be reduced by the amount exempt from tax. This is a very interesting one. I would love to ask this question in the examination on account of this very interesting twist in section 54. So so last question we will have from my point of view for discussion. So after this question number 10, so what we will try to do is, so we'll give 15 seconds for reading the question, 15 seconds for you to provide the answer, and then I will give my comment based on your answers, because all of you have already started doing it. But anyhow, for the benefit of others, I'm just trying to tell you how you should approach the question, and then we can try. But since all of you are already trying this, it's very nice to note that. Now in question number 10, this is my last explanation to the question without waiting for your answer. Going forward, as I said, we will wait for your answer and make our analysis and comment. Mr. Z received a motor car valued 15 lakhs from his friend on the occasion of his 60th birthday. I would not have even seen the multiple choice questions here because of only one fact. Motor car is not a property referred in section 56 to 10. So therefore, so what will happen is, straight away what I would have done here, I would have taken the option A as the answer for the question. So this is one way of approaching the question. Straight, motor car is not there. So why you are seeing other one, 1450 or 15 lakhs in excess of 50,000? All those things are not required at all, because of so motor car being a property in 56 to 10. So straight away we can come to a conclusion that it is not taxable. So So Karthik, what we can do is, like, you can read out the question.
Okay, sir.
You can give 15 seconds for them to answer the question. Then I will give my views on why they are right, or what went right for them, or what didn't go right for them. Right. So you're able to see the screen
No, sir. Screen is not still visible.
now.
Not it, sir.
Right. So now you are able to see the screen now.
The screen is not actually visible.
I'll reshare it again.
Sure. Sir, so in this meantime, I would share with the students that to make this session more interesting and to make it a competitive one, Marathi Coaching has come out with an idea that whomever the top performers of this MCQ session will be given free of cost the revision classes which are going to be conducted by TG sir in the near future. So take this as an opportunity to grab your tickets to free to the revision classes.
Now it's Karthik, is it visible now? Yeah.
Yes, sir. It's visible, sir. Shall we start?
Yeah, please.
So, family pension received by a widow of an army person who died in the course of operational duties. Yes. So, totally 4 options A, B, C, D. Eligible for standard deduction of 1/3 of family pension. Eligible for a standard deduction of 1/3 of family pension or 15,000, whichever is less. Eligible for standard deduction of 15,000, exempt from tax.
So there we go. So we have so Balaji, Panduranga, Arjun. There are so many answers of D. I don't know. So are we all following D because somebody said D? I would not know. But anyhow, so but the fact remains that the D is the correct answer for this question because so a family pension received by widow of armed person who died in the course of operational duties is exempt from tax under Section 10, subsection 19 of the Income Tax Act. So normally, family pension is taxable under income from other sources and is eligible for a standard deduction of 1/3 or 15,000, whichever is less. But however, so in case of widow of an army person who died in the course of an operational duties under 1019, it will be exempt from tax. So it's a very good quick answer, but a lot of people have answered D. For those who have given the answer as B, of course, that's the only thing that you have to make note of it. This will be exempt from tax under 1019. So you can straight away remove A and C from the list. It will be between B and D. So what I will do in the examination, if it is B and D, I will just go with D because B is the most obvious answer. Therefore, I'll just go against the most obvious answer. Yes, Karthik.
Yes. An AOP subjected tax audit from previous year 1920 and paid rupees 50,000 for professional services and rupees 50,000 to a contractor without deduction of TDS. The amount disallowed under section 40A IA will be 1 lakh, 30,000, 15,000, nil.
So we have some quick answer of a lot of answers once again of I don't know whether the answers which we are currently getting is for this question or the previous question as D and all. So I presume that the question number 12 is answered here. Now here AOP is subject to audit from previous year 1920. So the two dimensions at which you have to look at this question. For an individual or HUF, they should be subject to audit on account of monetary limits in the preceding financial year, or the turnover should exceed 1 crore in the preceding financial year. That's why most section will apply for an individual or HUF. Right? So I'll tell you why in this particular question, if instead of AOP, if the question is individual, you can straight away give the answer as TDS to be deducted will be or amount disallowed under 40A will be 0 because the TDS requirement is not there for an individual or HUF unless they are subject to tax audit in the preceding financial year. But the question is not individual or HUF. The question is on AOP. So as far as an association of persons are concerned, as far as an AOP is concerned, TDS requirement is there in all sections except 184C based on tax audit. Only in 184C, AOP must be subject to tax audit in the preceding financial year to be subject to TDS. In all the sections, AOP is treated like a partnership firm. A partnership firm is required to deduct TDS under all the sections, right? So, but AOP only in 184C is treated like an individual, and in the rest of the section, it is treated like a partnership firm. That means when it has paid 50,000 for professional services, it has exceeded 30,000 of limit under 184J. Therefore, TDS is required to be deducted. Whereas for a contractor, TDS is not required because tax audit is required in the preceding financial year, not in the current year. So therefore, no need to deduct TDS under section 184C. As a result of it, only 40IA will apply only for professional services, which is 50,000. And once it is 40IA, disallowance will be 30%, and therefore 30% of 50,000, it will come to 15,000. So when you read the question, AOP subjected tax audit from previous year 1920. Requirement is 1819. Only for one section 184C. Therefore 184C not applicable. Therefore disallowance for contract payment not applicable to 40IA. For all other sections, we don't have to check whether AOP is subject to audit or not. Therefore 50,000 requires TDS, not deducted, 30% disallowance. 15,000 will be the answer to the question. Therefore the correct answer to this question will be option C.
So question number 13. Rajesh, a senior citizen, has total income consisting of IHP and IOS. The tax payable by him is 20,000. The amount of advance tax payable by him on 15th June installment is A 9,000, B 6,000, C 3,000, D nil. Friends, just put the question number and answer so that it will be easy for us to track in future.
So pretty fairly and so easy one. So we have some answers have already come for question number 13. So yes, the correct answer is D, because Rajesh is a senior citizen. So senior citizens are required to pay advance tax only if they have income under the head profits and gains from business or profession. If they don't have income under the head profits and gains from business or profession, there is no requirement for them to pay advance tax by virtue of section 207 of the Income Tax Act. Therefore, I would have closed this question on the first line. Rajesh, a senior citizen, has a total income from IHB and IOS. That's all over. So once I'm a senior citizen, I don't have business income, and then I don't have to pay advance tax at all. So therefore, straight, don't see any other option, don't multiply and all. Straight away put the option as 0 and proceed to the next question.
Arun had unabsorbed loss from house property to the extent of 4 lakh for financial year 18-19. However, the return of income had not been filed on time. In the financial year 1920, Arun had house property income of rupees 3 lakhs and capital gains of rupees 3 lakhs. The total income for financial year 1920 is 6 lakhs, 3 lakhs, 4 lakhs and 2 lakhs.
See, as suggested by Karthik, Lokesh, so you can put the question number and give the answer as what others have done, 13C. Likewise, so you put it as for question number 14, what is the answer? That will be more easier. That's it. So we have some few questions here. It's a very so you see we have 14B, not D. So we have quite a lot of answers have come for this particular question. So the first point, as far as this question is concerned, is one on the so whether you can carry forward house property loss when the return of income is not filed on time. That's the first point. Now you can carry forward income from loss from house property even if the return of income is not filed in time. So therefore, carry forward of 4 lakhs is not an issue. So you don't have to first go by that. The second point is that loss from house property, most of us would have read, it can be set off only up to 2 lakhs, but that is there in section 71 of the Income Tax Act. That is when we talk about the inter-head adjustment. So only for that particular purpose, the restriction of loss from house property is available only up to 2 lakhs. It is not there in 71B. See, if you look at the scheme of set off and carry forward of losses, 70 deals with inter-source adjustment, 71 deals with inter-head adjustment, then 71B to 74A deals with the carry forward. So when you are adjusting the loss from house property within the same area of income, you can adjust beyond 2 lakhs also. There is no problem. So again, you just recall, for let out and deemed to be let out property, interest on capital borrowed can be claimed to any extent. Therefore, if I get a loss from let out property of 10 lakhs, I can set off against income from any other house property even beyond 2 lakhs also. Only when I want to set off again other heads of income, it is going to be restricted to 2 lakhs, and beyond 2 lakhs, I have to only carry forward. But if I'm using carry for brought forward losses in 71B, I can set off against income from any other house property, and there is no restriction there. So you can adjust any amount. So that means I have a loss of 4 lakhs. I have a high HP income of 3 lakhs. So entire high HP therefore can be knocked off, and I can carry forward the remaining 1 lakh. So that means my total income is going to consist only of 3 lakhs of capital gains. That means the correct option for this question is B, and not any other answer. For those who have got B, I think it's a very good answer. But in case if you got a slightly different answer, so you need to check. So the return of income not required to be filed in time for house property. Besides, you can also carry forward the entire amount and set off against income from house property under 71B. So just will.
Question number 15. Miller had loss from discontinued business to the extent of rupees 5 lakhs. In the subsequent year, he had speculation income of rupees 3 lakhs, house property income of rupees 4 lakhs, and salary of 2 lakhs. The total income in the subsequent year is 6 lakhs, 4 lakhs, 9 lakhs, and 8 lakhs.
So we got some answers in 15. So you can, so even if the business is discontinued, you are entitled to carry forward that loss for a period of 8 years. So loss from non-speculative business can be set off against income from both speculative as well as non-speculative business. So therefore, after the loss of 5 lakhs, I can still carry forward even if I've discontinued. Losses which are carried forward in subsequent years is available to set off against any business income. So therefore, I can set off with both speculative as well as non-speculative. So therefore, so I can set off that 3 lakhs from that 5 lakhs and carry forward the remaining 2 lakhs. So that means I'm going to be left out with 4 lakhs of income from house property and 2 lakhs of salary income. So brought forward business class, you cannot set off against high HP or salary income. So current year, yes, but not the brought forward. So that just leaves your answer as the first one. So which is going to be 6 lakhs is going to be your answer for this question. So we're just also trying to provide the ticker also, so that you can, even if you're not able to hear me, you can still go through the ticker which is going at the bottom of the screen.
Question number 16. Mr. C is physically handicapped. He received rupees 50,000 as transport allowance. The amount exempt under section 1014 read with rule 2BB is 38,400, 19,200, 9,600 nil.
So we have some very but so So in fact, I was just waiting for 16D as an answer, which has now come because, like, uh, so basically, what you should all understand, the standard deduction is given in. So the standard deduction of under section 16(1)(a) was introduced after removing the exemption under section 1014 for the transport allowance, and also after removing medical facility of 1,250 rupees per month. So those two have been removed. So earlier, for those who are familiar with the 19,200, so 19,200 is a transport allowance which was available earlier, which is 1,600 rupees per month, which was available. But in case of physically handicapped, the 1,600 was 3,200. So the standard deduction was introduced, and once introduced the standard deduction, they removed the exemption for transport allowance and medical facility. But however, the exemption continues even today for physically handicapped, and they were already getting double the amount of the normal person. So if I ask the same question, that if the assessee is not physically handicapped, your answer would have been right with the 16D, which what most of you have got. But so here the answer is 38,400. Those who have got the answer is 16A. It's a pretty good answer for this question. But the most popular answer has to be 16D. But in place of transport allowance, standard deduction was introduced. But even today, transport allowance continues for physically handicapped at the higher rates. So very slightly tricky question. Most of us would not even read this particular section also. So that's the answer for the question A.
Number 17, Mr. E was provided with a laptop costing
Maybe
rupees 50,000.
Yeah, sir, go. Yes, Karthik, go.
Should I wait?
No, go.
Yes, sir. Question 17. Mr. E was provided with a laptop costing rupees 50,000 by his employer for private and official use. 50% used for private purposes. The amount of perquisite is 5,000, 25,000 nil, 12,500.
So basically, what the government is specify when they introduce this purpose in the Rule 378. So this is basically intended for the hardware, the computers and laptops penetration throughout the country. This is what we call it as a government of India's income tax, IT or information technology hardware encouraging policy. That's what we call. Based on that, they wanted to encourage employees giving laptop for both official and private purposes. Therefore, they said the taxable value will be kept as zero for use of laptop. So therefore, the correct answer will be C. And we're just trying to tempt you by putting some other versions also, but the correct answer for this particular question so will be nil. So it doesn't matter whether it's for private or official purposes.
Question number 18. A Limited provides education facility to the 3 children of the employee in an institution run by the employer. The cost of providing education in the nearby locality is rupees 800 per month, 1200 per month, and 2000 per month respectively. The amount taxable in the hands of employee as per Rule 3.5 is 12,000, 14,400, 38,400, and 24,000.
So what we'll do is once we cross 5 answers, we'll take it as we can go for the discussion. So here, as per Rule 3.5, if the education is provided in an institution run by the employer, then the cost of providing similar education in the nearby locality will be the taxable value. But however, if the cost of providing similar education does not exceed 1,000 rupees per month, nothing will be taxable. What is very important here, the 1,000 rupees per month is available for any number of child. It's not restricted to 2 children, unlike most of the sections of Income Tax Act. So you can claim for any amount. But what many students are trying to do is they add 800,000, 200, and 2,000, then subtract 3,000 and multiply by 12. Now, for the first child, since it is not exceeding 1,000, nothing will be taxable. For the next two, since it has exceeded 1,000, fully taxable. So therefore, you cannot work out in any other mechanism. There is no restriction of children. So therefore, what we have to do is add the 1,200 plus 2,000, which will come to 3,200, and multiply by 12. I will not even make a multiplication. It is definitely is not 12,000 or 14,400, 24,000. So straight away, I will take the answer as 38,400. So it's up to 1,000 not taxable, and once you cross 1,000, full amount is taxable. First child, it's available for all any number of children, not a problem at all. First not taxable, second and third fully taxable. Therefore, the correct option for this question will be option C.
Question number 19. Mr. F received rupees 49,000 as a gift from his employer on the occasion of his 50th birthday. The terms of employment does not provide for payment of such amount. The tax implication of the gift: rupees 44,000 taxable under salaries, 49,000 taxable under salaries, 49,000 taxable under IOS, neither taxable under salary or under IOS.
So basically, what has been tried in this particular question, we have got a lot of answers of D, though some answers are B. Now, it's a very interesting, tricky point here is about whether this can be first taxed under the head salaries. In salaries, the free gift is taxable. Uh, so if it is 5,000 or more, and only thing what we need to really find out whether the gift is offered as a part of his salary. So it's very clearly given in the question that the terms of employment does not provide for payment of such amount, and it is given on the occasion of his 50th birthday. So therefore, it appears that it is not for the purposes of his rendering of service. So once it is not is rendering of service, it is not a salary. So you cannot try to tax this under the head salaries. Therefore, we straight away take option A and option B out of the discussion. But then you have to take it income from other sources, assuming that he has not received any other gift, which is the most logical assumption in the question. So to apply the provisions of 56 to 10, the amount should be exceeding 50,000. Now, since the amount has not exceeded 50,000, this cannot be taxed under the income from other sources. But salary is not there because the terms of employment does not provide for this. And therefore, it appears from the question it is personal in nature, and therefore it has to go to IOS, but IOS will apply only when you cross 50,000. So since the amount has not exceeded 50,000, the correct option is D, which is neither taxable under salaries nor under income from other sources.
The next question. Mr. J exercised ESOP of 200 shares. On the day of exercise, the shares were not traded in the stock exchange. The average price of shares and closing price on the last working day was rupees 500 and 490 respectively. The average price of shares and closing price on next working day was rupees 510 and 480 respectively. The value of perquisite is 96,000, 98,000, 1 lakh, 1 lakh and 2,000.
So once we reach 5 answers, we'll discuss this. So in the equation here, what we need to consider here is one. So what is the elimination which we're going to do is the question. So here the shares were not quoted on the day of exercise of option. So therefore we ought to go by the last working day. You cannot go by the next working day, but we have to go by the last working day. So that means the 510 and 480 is out of the reckoning. So it has to be either 500 or 490. But if they are traded on the date of exercise of option, you go by the average. So if it is not traded, you don't take the average. You do take only the closing price. Now, since the closing price is 490, the number of shares is 200. So 200 into 490, that will give you the answer as 98,000. And so that's why this question will have an answer of 98,000. So the choice has to be between 500 or 490 or A or B, but you don't take the average now, and therefore the answer will be 98,000.
Question number 21. Mr. B has borrowed for the purpose of repairing his self-acquired property. However, this property has not been opted by him as self-occupied under Section 23(4), read with Section 23(2) of Income Tax Act. Interest payable for the previous year 1920 amounted to rupees 3 lakhs but has not been paid. Amount deductible under Section 24(b) will be. I think we can discuss the answer, sir.
So here, see, the annual value should be taken as 0 under section 23(2). So only when the annual value is taken as 0 under section 23(2), the restriction of 2 lakhs or 30,000 will apply. Once you have not taken the property as 0, then for a deemed to be let out property or for a let out property, whether it is for repairs or for anything, the restriction does not apply. So that's the first point. Though the restriction does not apply, the next question is that whether the limit of 2 lakhs up. The limit of 2 lakhs is fixed for a house property for let out deemed to be let out as a loss under section 71, not under section 24B. In 24B, they don't say that interest for deemed to be let out or let out is restricted to 2 lakhs. You can claim any amount. Only thing is that if your final amount is a loss, then you can set off only up to 2 lakhs and balance you can carry forward. So therefore, here don't be tempted by the word repairs, set of file restricted to 30,000, because generally we get an answer of, most of the time we get an answer of C, but the actual answer is only B for this question. So no restriction for deemed to be let out or let out property under 24B.
Question number 22. Mr. D has borrowed rupees 9 lakh at 5% per annum on 1st April 2014 from his brother who is residing in London. Tax has been deducted at source on the interest payable. The construction of the property was completed on 30th September 2019. Amount deductible under section 24B will be option A 90,000, option B 72,000, option C 30,000, option D nil. Sir, as regards question 20, we have a query, sir. So is actual repayment necessary
For what?
for claiming interest, sir, of 3 lakhs?
Not required. It's allowed on due basis. Payment is not required.
Okay, sir.
Well, some more question is also from medical.
I'm looking on it, sir. Whenever I find some, I'll put it to you, sir.
Okay. So the 22nd we are in now, so a lot of answers have already come. Okay. So what are the answer you're getting? Most of them.
Most of them got D, sir.
So why they're saying it's zero, I don't know. Right. So as far as 24B is concerned, you must understand you can take the loan from any person, including brother. There's no problem at all. And the tax has been deducted as source. It's also given as information. Therefore, section 25 also will not apply. So therefore, the answer cannot be nil, right? So it is definitely not going to be zero here. The only question is that should we have to restrict it to 30,000 or 5 years? I don't think that is also going to be the case here because the property is constructed within 5 years. So the completion is 30th September 2019. The 5-year period will be counted from the end of the financial year in which you have taken the loan. So loan is taken on 1st April 2014. End of the financial year is 31st March 2015. 5 years will expire by 31st March 2020. So therefore, there is no restriction of that 30,000. You can claim any amount of interest as a deduction. That is up to 2 lakhs if it is self-occupied also. So you have current year interest of 9 lakhs into 5, 45,000. Last 5 years interest will be 45,000 into 5. So pre-construction interest is going to be allowed in 5 equal installments. So therefore, you don't have to make any calculation at all because 45,000 to 5 divided by 5 is again only going to be 45,000. So therefore, the answer will be 90,000. And not the majority of the answers is pretty surprisingly zero. I don't know why you've taken it as zero. Interest is allowed on due or accrual basis. Unlike 80C, you can take loan from any person in 24B. Therefore, definitely the answer cannot be zero. And it cannot be also 30,000. So it has to be between the first or second one. But the correct answer is A, which is 45,000 of current year and pre-construction interest of 45,000 to 5 by 5, which is 45,000. So correct answer will be 90,000.
Question number 23. Mr. A has 3 self-occupied properties. First property is occupied by him along with his family, wife and minor son. Second property is occupied by his parents for residential purposes. Expected rent of the second house is greater than the first house. The benefit of nil annual value can be claimed for option A, first property, option B, second property, option C, first or second property at the option of A, option D, both first and second can be taken as null, and third property will be treated as deemed to be let out property.
So though from 2 houses can be taken as self-occupied from assessment at 2020. So in fact, the first and second house are occupied by him as well as his relatives. So they automatically will be subject to zero annual value. Third property, which is there, that will be taken as a deemed to be let out. The option has to be between C and D. But since you are allowed to take 2 houses as self-occupied, so option will be D, and therefore you can take 2 houses as zero, and the third one will become deemed to be let out. So this is just a test, a small test on the amendment to the section. Yes, Karthik, you can.
Yes,
Terida?
sir.
Yeah.
Yes, sir. Question number 24. Arrears of rent not taxable in the earlier years amounting to rupees 5 lakhs was received by the assessee on 2nd April 2019 due to court decree on 25th March 2019. The legal expenses incurred on the same is rupees 50,000. The property was sold by the assessee on 31st March 2019. Option A, 3,50,000 is taxable under IHP in previous year 1819. B, 3,50,000 is taxable under IHP in previous year 1920. Option C, rupees 4,50,000 is taxable under IOS in previous year 1819. Option D, rupees 5 lakhs is taxable under IOS in previous year 1819.
So basically, we have just quickly lot of answers in this particular one, and except for one answer, rest of them seems to be very right, which is so here arrears of rent not taxable will come under section 25A, which will be taxable in the year of receipt. But even if the assessee is not the owner, it will be taxable only under IHP. It's not IOS. Therefore, straight away option C and option D will go out of the system. IOS is not the correct answer because even if the property is sold, the income will be taxable only under income from house property. The only question is, since the court decree was obtained on 25th March 2019, should it be taxed in 1819 or in the year of receipt? Section 25A specifies you have to pay tax only in the year of receipt, but you are eligible for a standard deduction of 30%. So 3,50,000 therefore will be taxable in the previous year 1920. The answer is not going to change even if the assessee is not the owner in the year of receipt. So 350 will be taxable under income from house property for the previous year 1920.
Okay, this is question number 25. A Limited is engaged in the business of construction and sale of flats. On 1st June 2016, it completed the construction of 500 flats in OMR. It sold 100 flats on 31st March 2018 and 300 flats on 31st March 2017. The company sold the remaining flats on 30th September 2019. None of the unsold stocks have been let out. Option A, the company has to pay tax on expected rent of 500 flats in previous year 16-17 for 10 months and 200 flats in previous year 17-18 for 12 months and 100 flats in previous year 18-19 for 6 months under IHP. Option B, same as A but under PGBP. Option C, the company has to pay tax on expected rent of 100 flats in previous year 1920 for 6 months under IHP. Option D, same as C but under PGBP. So guys, just administrative note to you that we said right we are going to select the top 5 performers. So this is the basis we are selecting those top 5 performers, whomsoever it is. The first 5 people who give the correct answer are being consolidated. That is for first question, second question, third question, and who gets the highest marks will be the best performers, and they will be awarded as said before. So I think we have got many answers of combined of C and B. Just to fill in the gap, let us discuss about this question. So generally we got two answers, that is B and C. This is the recent amendment which was given in Finance Act 2019. So in that Finance Act, what it was said is we can, that is property which is constructed and not sold for a period of 2 years from the end of the year in which the certificate of completion is received did not be chargeable to tax. So interestingly, in this question, the projects were completed quite before the amendment of that is the introduction of this section, and even in such cases this section would be applicable to them, that is this amendment would be applicable to them. So option C would be the perfect answer, since the 2 years has elapsed. For the first 2 years we need not pay the expected rent. So option A is ruled out, option B is also ruled out. So either it is option C or option D. It is option C, since there is a separate charging section under it is discussed separately under the income from house property. So option C is the correct answer for this question. So I will explain this again just to fill in the gap we spoke at. Okay. So sir will be joining us shortly.
Right. So basically, as far as this particular question is concerned, so in 23, 5 was introduced in assessment year 2018, 19, because of a lot of real estate companies when they had the unsold properties. So what they were actually doing was they were not offering the income for tax. Some of them also let out those properties, but some of them also were just keeping it idle because it is not going to be perishable. So no way those so these they were holding the stocks. Some of them are letting out partially, and some of them are not letting it out, but they are waiting for the price to appreciate. See, what the government felt here was like when you are selling a tomato, you don't wait, right? So you just keep selling the property because it's going to be perishable. But when it comes a question of those real estate companies, they were actually holding the stocks. Some of them even letting it out, and they were saying that let out property should be taxed only under business income, if at all taxable, because in business income you have to pay tax only on the actual income. But whereas the income tax department took a stand that the income should be taxed on the income from house property, and whether you let out the property or not, in income from house property, there is no requirement for you to actually derive rental income. But this, once the government clarified that all property should be taxed, so there was a bit of a backlash because the real estate sector, which is already reeling, told the government that this will put us in a very difficult position. So what they have done, therefore, was to give 1 year of extension. That is, if you complete the property in June 2016 till 31st March 2018, being 1 year from the end of the financial year, you don't have to pay tax if you don't actually let out the property. But in this Finance Act, this 1 year period has been extended to 2 years. That means you can keep the unsold stock for a period of 2 years from the end of the financial year, which is not actually let out. There's no need for you to pay the tax. So as important note, this amendment, though it's effective from assessment in 2021, it's also applicable for the projects which are completed earlier also. So therefore, so since in this particular question, the property is completed in the previous year, or rather it's completed in 2016, end of the financial 31st March 2017 till 31st March 2019, unsold stocks will not be taxable. So that means you don't have to pay tax till 31st March 2019. So already the company has sold 100 plus 300, 400. This just left out only 100 flats, which in the current financial year is there for 6 months unsold. So therefore, for that 6 months, you have to pay tax under income from house property on the expected rent. So therefore, the correct option is 25C. For 2 years, no tax from the end of the financial year, but thereafter you should pay tax on the unsold stock on the expected rent. That is the new amendment in section 23(5). So that is on 25. So we'll just go to 26.
Question number 26. In case of succession of business during the year, depreciation between the predecessor and successor are based on number of days. Option A, number of days put to use by predecessor and successor. Option B, allowed only for successor. Option C, allowed only for predecessor. Option D, based on number of months.
So I think there is quite a lot of answers for this question, which is also a pretty correct answer as well. So in the case of succession, the depreciation will be available to both predecessor and successor, and that will be based on the number of days for which the predecessor and successor have put their asset to use. So for the correct option is actually 26A, but I think most of you seem to be extremely thorough in this particular question.
Question number 27. Business loss arising on account of investment allowance. Option A can be carried forward for 8 years if return of income is filed within 139(1) due date. Option B can be carried forward for 8 years if return of income is filed under section 139. Option C can be carried forward for any number of years if return of income is filed under section 139. Option D can be carried forward for any number of years if return of income is filed under section 139(1).
So basically, the answer for this question depends upon what is the nature of investment allowance. That is what is very important. So is the investment allowance is treated like a depreciation, or is this investment allowance is treated like a business loss? So if it is an additional depreciation, the additional depreciation is treated like depreciation. So therefore, all provisions of depreciation will apply. But unfortunately or fortunately, investment allowance is treated like a business loss. So any loss which arises on account of 32AD is treated as a business loss. So in the case of a business loss, you have to file the tax return. It's a part of business loss. It's not part of depreciation. So investment allowance is part of business loss. In order to carry forward business loss, you have to file the tax return within the due date specified in section 139(1), and business loss can be carried forward only for a period of 8 years, and therefore the correct option is actually only A, and not most of you have taken a slight different answer, but investment allowance is like your business loss, so therefore it can be carried forward only for a period of 8 years, and you have to file the tax return within 139(1) due date. So just the way in which you should try to approach, how does the loss treated on account of investment allowance? It's a business loss. Therefore, all provisions of business loss will apply. So that's the way you should try to approach this question.
Question number 28. X Limited incurred rupees 100 lakhs on building and rupees 50 lakhs on plant and machinery on in-house R&D, the facilities of which are approved. The company is entitled to a reduction of option A, rupees 150 lakhs in computing its business income. Option B, rupees 175 lakhs in computing its business income. Option C, rupees 200 lakhs in computing its business income. Option D, rupees 225 lakhs in computing its business income.
So again, the question here is that 35 2AB's availability. 35 2AB is available for both capital expenditure and revenue expenditure. But in capital expenditure, you don't get the benefit for land or building. So X Limited, therefore, is eligible for 2AB, unlike one of the previous examples where we took the benefit is not available for LLP. But again, for building, you don't get 35 2AB, but still you can get under 35(1) clause 4. Therefore, for building, but in 35(1)(4), you get only to the extent of 100%. Therefore, 100 lakhs will get under 35(1)(4). The 50 lakhs will be eligible for reduction under 35 2AB at the rate of 150%. So that takes it to 75. So therefore, you 100 under 35(1)(4), 75 under 35 2AB. Therefore, the total reduction will come to 175 lakhs. So what has got the answer is B. You're right, but there's so just need to find out where you actually missed it out. So the question is not on how much at the 35 2AB. The question is how much you will get deduction in computing the business income. So that is the crucial point. So therefore, 100 under 35(1)(4) and then 75 under 35 2AB, and totally you will get 175. Building will not get deduction under 35 2AB. It will get only under 35(1)(4). But the moment you go to 35(1)(4), you'll get only 100%.
Question number 29. X Limited paid a royalty of rupees 50 lakhs without deduction of TDS to a non-resident. The payee has included the same in his income and has paid the tax. In the hands of X Limited, royalty paid, option A, will be disallowed to the extent of 100% under section 40A. Option B will be disallowed to the extent of 30% under section 40A. Option C will be disallowed even though the payee has paid the tax, but Form 26A cannot be furnished by a non-resident. Option D will not be disallowed since the payee has paid the tax provided he furnishes Form 26A from his chartered accountant.
So again, this is a very interesting question based on the amendment to the section. Up to last year, so just to give you a little bit of a background so that you can appreciate the provisions. So if a payment is made outside India to a non-resident, there is a 100% disallowance. If it is paid to a resident, there will be a 30% disallowance. Even if I have paid the amount to the payee without deduction of tax, the other person has to include the income and has paid the tax. So 202 very clearly provides that TDS is only one mode of recovery. So just because the other person has not deducted, I cannot come back and tell that I will not pay the tax, which is neither permitted by 202 nor by section 191. So that means there is a need for me to make a direct payment in the event of me receiving the amount without deduction of tax. So I have to include the income, pay the tax. Unfortunately, can the TDS also subsequently be recovered? That's where the Supreme Court stepped in and said, once the recipient has paid the tax, it is not possible for you to recover the same once again from the other person. So if you pay the tax, don't again go for TDS. TDS is not the only mode of recovery. TDS is one of the modes of recovery. So this was decided by the Supreme Court in the very famous case called Hindustan Coca-Cola. Subsequently, what they have done, so they have introduced an amendment in 201 proviso specifying that whether the recipient is included the income or has paid the tax, let it be proved by taking a certificate from a chartered accountant in form number 26A that the recipient is included the income and paid the tax. However, till assessment in 1920, this was available only to resident payee only. That means if the payee is a resident, he can issue form 26A. Thereby, the disallowance will not apply. But however, in assessment at 2021, the 201 proviso, the word resident in that section 201 proviso has been changed to payee. That means he can be both a resident as well as a non-resident. That means now from assessment at 2021, Form 26A can be given by a non-resident also. That means the first one and second one automatically go out of the discussion. So will not be disallowed since the pay has paid the tax provided he furnishes Form 26A from his chartered accountant. Now Form 26A can be furnished by the chartered accountant by the non-resident also now. And therefore the correct answer for this question will be D. This is question based on amendment from assessment year 2021. So that is the reason behind this particular question. So, but I think most of you got that right. It's a good one. So let's go to
Question number 30. X Limited obtained a loan of rupees 10 lakhs at the rate of 12%.
Karthik, just Karthik, 1 second, Karthik.
Okay, sir.
So okay. Karthik, go ahead. Hello, Karthik. Yeah, yes, Karthik, you can go.
Question number 30. X Limited obtained a loan of rupees 10 lakhs at the rate of 12% on 1st October 2018 for acquiring plant and machinery. The machinery was put to use on 1st Jan 2019. Interest that can be claimed under section 36(1)(3) for AY 2021 is option A 1,20,000, option B 30,000, option C 1,80,000, option D 1,50,000.
So again, the only small catch here is the same point which we discussed earlier. So the machinery was put to use on 1st January 2019. A similar question we tried in family pension as the first question also. So first 3 months, see, normally we have the tendency to take a test for 3 months, January, February, March. But this question is for assessment at 2021. So for the assessment at 2021, the previous year is 1/4/19 to 31st March 2020. So that means you will get the interest for the full 12 months. So if the question is for assessment in 1920, then your answer is right, which is B. But if the question is for assessment at 2021, it should be for the entire 12 months. So that's a small catch. Look at the dates. That's sometimes is pretty crucial. So you can claim full 120 for assessment at 2021.
Question number 31. Dividend of 15 lakhs on shares held as stock in trade of an Indian company will be taxable as option A PGBP, option B income from other sources but at the rate of 10% on 5 lakhs, option C entire 15 lakhs will be taxable under other sources but at the rate of 10%, option D exempt from tax.
So again, what has been tried in this particular question. So when the dividend of 15 lakhs on shares held as a stock in trade will be taxable as, so when it is given 15 lakhs, whether it is exempt from tax or whether you have to pay tax at the rate of 10% on the dividends in excess of 10 lakhs, or entire 15 lakhs you have to pay tax at the rate of 10%. So the taxation in excess of 10% or the rate of 10% excess of 10 lakhs will apply for all associates except companies. So Indian companies are not subject to tax on this, because there's already the post-tax profits which are subject to tax. So again, on which the company has already paid the dividend distribution tax. So this, it's basically called as a super rich tax that is basically not applicable for a corporate. So that's why the amount to be the answer for this question is D and not any other answer.
So question number 32. Mr. X is a central government employee. His
No,
basic
no,
salary is 10 lakhs.
no, no, Karthik, just leave that. We can go to the next question.
Okay, sir. No issue. Question number 33. Mr. Y's income from agency business is 40 lakhs and his income from trading business is 60 lakhs. As per books of accounts, he makes a profit of rupees 10 lakhs and 12 lakhs respectively. All his receipts are through account pay check only. His business income, if he opts for presumptive income, option A 6 lakhs, option B 22 lakhs if he chooses to offer higher income, option C cannot opt, option D 8 lakhs.
So it's a very quick, fast answer for this question. Just 33C, because once you have income from agency business, 4480 specifically provides you cannot choose presumptive income if you have profession referred in 44A, or if you are earning income from commission, or if you are also having an agency business. For once, if you are a person having income from agency business, then you are not allowed to choose presumptive income. So therefore, the correct option is you cannot choose 4480 at all. So the idea began was we just tried to twist into 8%, 6% account paycheck and all, but that's got no relevance to the question.
Question number 34. A Limited holds gold and silver business divisions. It decides to sell its silver division on 31st March 2020 for 400 lakhs. It has assets worth rupees 600 lakhs and liabilities to outsiders for 800 lakhs. It also has a balance of rupees 100 lakhs in revaluation reserve, all relating to silver division. The silver division has started its operation in February 2017. The A Limited has also invested 50 lakhs for exemption under section 54 EC. Compute capital gains CII 1920 289 1617 264.
So we are in 33 or 34.
Sir, we are in 34, sir, right now.
Because many of the answers are coming for 33. That's why that's asking. So here for some still there is no indexation of cost of acquisition. Uh, so now the assets are 600 lakhs and liabilities 800 minus 200, but there is a revaluation reserve of 100 lakhs. So that means to the extent you have to exclude. So net liability is minus 300 lakhs. So you get a consideration of 400. So 400 minus 300. Even if the cost goes negative for slum sale, you can take the cost as negative. Since there is no benefit of indexation available for slum sale, so the correct answer for this question will be a long-term capital gains of 700 lakhs. You don't get the benefit of 54 EC for any asset other than land or building from assessment year 1920. So therefore, the correct option will be 700 lakhs of long-term capital gains. I think maybe the other options also made the answer for this question a little bit more simpler.
Question number 35. The amount of capital gains exempt under section 112A is 1 lakh for all assessees, 1 lakh only for individual and HUF, 1 lakh for resident individual and resident HUF. Option D, none of the above.
So generally, that is what we normally 112 is you have to pay tax of 10% in excess of 1 lakh. But you can't say that 112 is basically an amount exempt from tax, right? So therefore, it only says you have to pay 10% tax in excess of 1 lakh, but 112 does not give you any exemption at all. So therefore, so the amount of capital gains exempt as a word, you have to be very careful, especially so if I have a capital gains of 1 lakh and 112, it's not exempt. I have to include as a part of total income. So therefore, 112 only talks about the amount of tax payable in excess of 10 lakhs. Therefore, the capital gains exempt for 112 is actually none of the above, because you can't say it is exempt from tax. It's only a tax payable in excess of 1 lakh. So it doesn't use the word exempt. Therefore, the amount of capital gains exempt to 112A, the correct option will be the option D, because there is no exemption per se is available for 112A. It only talks about in excess of 10% you have to pay tax. So therefore, I will go with the answer of none of the above rather than any other option.
Question number 36.
So I think that's a very nice way of giving the answer. So what will so I'll do one thing. So we'll have one slightly different one. This has also got one danger. Kathy, you can go with this question.
Okay, sir. Question number 37. ABC and Co. at the time of dissolution of the firm has distributed land to its partners. The cost of acquisition was rupees 5 lakhs. The fair market value is 12 lakhs, while agreed value as per dissolution is 10 lakhs. The capital gains is option A, 5 lakhs in the hands of the partner, 5 lakhs in the hands of the firm, 7 lakhs in the hands of the partner, 7 lakhs in the hands of the firm.
We've already reached the answer. So, Karthik, which one? Actually,
Sir, we were in 37, sir. Question number.
it's number 37.
Yes, sir.
So ABC Co at the time of dissolution. So the cost of the so under section 45(4), when the firm dissolves and distributes to the partner, the capital gains will be taxable in the hands of the firm. And for this purpose, he should use the fair market value as a basis. Unlike in the case of a company on liquidation, the capital gains is going to be paid by the company and not, by the shareholder and not by the company. But in the case of a partnership firm, it's just the reverse. The tax is going to be in the hands of the partnership firm. And you don't take the settlement value, but you go by the fair market value. So the fair market value is 12 lakhs, the cost of acquisition is 5 lakhs. And the capital gains as per section 45(4) will be in the hands of the partnership firm. So therefore, the answer will be capital gains of 7 lakhs in the hands of the firm. So we'll move on to some more questions. Katipo, just are you able to see the question?
Yes, sir. So we are again starting from, we are changing the numbering, right, sir?
Yeah, we'll have, so 5 more questions we'll have.
Okay, sir.
So we'll.
Okay, sir. Question number 1. Total income of X LLP for the assessment year 2021 amounted to rupees 15 crores, the LLP will be subject to surcharge at the rate of option A 37%, option B 12%, option C 25%, option D 15%.
I think 1 o'clock factor is playing on it. Oh, 25 crores is a very interesting answer from Kamesh. So we have, after some various answers, the correct answer for this particular question will be the surcharge. The additional surcharges and all are applicable only for individual HUF for that bracket only, that you have 25%, 37%. They are not applicable for companies or LLPs or firms. So they continue to have the same surcharge of the last year, which is only 12%. So therefore, the LLP or firm, once the total income crosses 1 crore, will have a surcharge of 12%. You don't have to go by their total income. In fact, the total income is applicable only to decide whether they've crossed 1 crore or not. That's all. So the correct answer therefore is option B of 12%. So just take a slightly different one now. It will take
Question number 2.
some time for you. We have to give them some 2-3 minutes for this question. It needs some working.
Okay, sir.
Yeah.
Sure, sir. Mr. A's total income consisted of STCG, STT paid of rupees 1 lakh and PGBP of rupees 50 lakhs. Sir, I think tax payable by him for assessment year 2021 is option A 14,53,400, option B 14,37,800, option C 15,18,660, option D 15,1,500. Sir, actually, screen has been changed to the old slide, sir.
Okay. Just saying how many questions are still there. So,
Okay.
okay.
Just because students were answering, I just brought
Yeah,
that
yeah.
to your notice.
Now the screen is there now.
Yes, sir. It's perfect.
So whoever gives the answer, please explain your answer, even if you take a couple of minutes extra, but there's a need to justify your answer for this question. But Surya, what's your answer? So you've not given the option. So you given what is the tax rate, Surya, but you have not given what is your option, whether it is A or B or C. C 2C, okay. So somebody is giving 2D also. Did you all consider the marginal relief? So while giving your answer, whether the marginal relief has it been factored? So just check on the marginal relief part of it, because the total income is 51 lakhs. You need to check whether the marginal tax has exceeded the marginal relief. That's the one calculation which you may have to do. So after considering marginal relief, are you getting 2C, or is it without taking into account the marginal relief part of it? Any change in your answer because of that, after considering the surcharge factor, the so now if you consider the margin relief, the answer has to be 14 lakhs 53,400. Because you have to keep the 50 lakhs as a base and take 1 lakh out of STCG and 49 lakhs out of business income. And then if you consider the margin relief, then you will get the answer for the question as 2A and not 2C. So again, the factor to be considered here is the margin relief part of it. So if you take margin relief, you will get the answer as 2A for the question. So that was the what has been tried in that particular question. So about the marginal relief factor of it. So the correct answer for this question therefore will be A if you consider marginal relief. So you just try that. So you will get the answer as A for the previous question. Now let's move to question number 3. Karthik, are there?
Yes, sir.
Yeah.
Question number 3. Mr. B's total income consisted of STCG, STT paid of rupees 6 crore to 2,50,000. The tax payable by him for AY 2021 is option A 1,28,000 1 crore 28 lakhs 23,200. Option B 1 crore 28 lakhs 76,630. Option C 1 crore 7,64,000. Option D 1 crore 8 lakh 8,850.
So whatever answer you give, the question possibly you can explain a bit of a rationale behind your answer. So at least from the perspective of the class, at least I know that. So Balaji Shankar, the very quick answer of question number 3C. Any reason, sir? So Aravind has put as 3D. Whereas we have 3C. Balaji, can you explain your answer? Because or you just making some guesswork? So So Arvind Balaji, can you just throw light on why you got that number? And now we have 3D. Three D as an answer of Ramesh, it's possible if you have not considered the basic exemption limit is actually available for short-term capital gains on which STT is paid. Because you have not taken the basic exemption limit of 2.5 lakhs, you are getting the answer as D. So that's why 3D is not the correct answer, because 3D indicates that you have not considered the basic exemption limit. So if you consider the basic exemption limit, so you will not get the answer as 3D. So Ramesh, everything you have done is right, except for the fact that you have not taken the basic exemption limit of 2.5 lakhs. So if you take the basic exemption limit of 2.5 lakhs, and also the surcharge for capital gains under 111A and 112A is always going to be 15%. It's not going to be dependent on the total income. So therefore, the answer for this particular question will be option C, which will be 107,640,000. So those who have got the answer right, because you should consider the basic exemption limit. So if you take the basic exemption limit, then apply this surcharge and cess, you will get the answer of 107,640,000. So those who got the answer right, it's a good answer. So, and Arvind, you just missed a small point. Ramesh, you missed slightly, but still, that's one way of learning things. So let's. We have two more questions. Then you have question number 4. Yes, Karthik. Can.
Yes, sir. Question number 4. Mr. B's total income consisted of winnings from horse races of rupees 5 lakhs. The tax payable by him for AOI 2021 is option A 1,43,000, option B 1,56,000, option C 65,000, option D 78,000.
So we have quite a lot of answers of 4B, but 4B is lacking 56,000. If you've all taken 4B as the answer, that means what I can guess out of your answer is that you have not considered the 87A rebate. Say rebate under 87A is not available only for 112A, except 112A. So all other sections do have a 87A rebate. So therefore, because you have not considered rebate under 87A, all of you are getting an answer of 156,000. But actually, if you consider the rebate under 87A, the correct option for this particular question has to be only A, which is 1,43,000. So again, to repeat, rebate available for 115 dB. So there is nothing to restrict. You can claim rebate. So claim the rebate, the answer will change. So therefore, the answer will be A and not B. So though the majority of the answer is B, that is an account of not considering 87 rebate. So let's
Question
have
number question number 5. Mr. C's total income consisted of LTCG of 5 lakhs. During the previous year 1920, he was out of India for a period of 306 days. Before the current previous year, he has never left India. Tax payable by him for AY 2021 is option A 91,000, option B 1,04,000, option C 39,000, option D 52,000.
So you have A, D, D. So any reasons? See, I think if the reasons are also spelled out in these kind of questions, it'll be easy for us to appreciate your answer. So Abhishek, Arvind, Vinod. So we can all just let it be this thing, but any reasons, please give your reasons for your answer. So one hint which I can give to the question is so far we have not got the correct answer so far. So basic exemption limit can be utilized for set off, that's fine. But first, what is his residential status? Is a resident or a non-resident? See, that is the first point which we have to consider in this question. So whether C, is he a resident or a non-resident? That's first one. So that is the first point which you need to consider in this question. Because if you are a non-resident, please understand, then you don't get the basic exemption limit for long-term capital gains. Basic exemption limit for long-term capital gains is available only for individual and HUF if they are resident in India. So if you're not a resident in India, you don't get the basic exemption limit. That is the first point. So to that extent, Balaji Shankar has got it right, because this being a leap year, 366 days, so 60 days, and therefore is a resident. So to that extent, that's fine. So again, the remaining 2.5 lakhs, 20%, 4% says the same point which we discussed in the previous question. Again, if 87A rebate did you consider? That's a question. See, 87A rebate is not available only for 112A. It's available for 112. So only if you are getting long-term capital gains under 112A, so you don't get the basic exemption limit. Here it is I'm not given STTs paid and all. So therefore, otherwise you should take always 112 only. Don't go by 112A. Problem should specify STT has been paid. So then only it is possible for us to take it as 112. So if you consider 87A, and you also consider the point that in this particular case you should take into account this is not going to come at 112. The correct option on that basis will be C, will be the answer for the question if you also consider the rebate of 12,500. So therefore the option for the question is 39,000 will be the answer. So resident basic exemption limit available. So 2,50,000 to 20%, 50,000, that's right. So only thing what Balaji Shankar has missed out is not considered the rebate of 12,500. If you consider rebate of 12,500, it will come to 37,500. Then if you add 4% cess, so that will take it to 39,000. So the correct option for this question will be option C, 39,000. Right. So Karthik, it's 125. So what should I know? So
the results are being processed. If so, this is the end. Or if we want to continue, what is your call?
Huh?
Sir, should we continue or the results are actually processing, sir? It will say take some 5-10 minutes. So
Yeah,
why
so
don't you share some examination tip?
See what we can do is like before we the examination tips will depend upon again there is a different strategy we need to adopt if you're an intermediate student and if you're a final student. So I think it will be generalizing will become slightly too difficult because of the pattern difference, because you have 40 marks of GST there and here you have 30 marks of international taxation. So I think so what we can possibly do is like maybe for a couple of minutes we'll just try to catch a few more questions which are also there. But before that, the only thing is that like so we are also planning to have 3 days of revision classes both for inter and final, of which one class would be completely devoted again for multiple choice questions, considering that carries 30 marks at the intermediate level, at the final level. We have consciously avoided the international taxation in this session, so we'll have 30 marks of international taxation, which again is going to translate into 9 marks of MCQ. This is also going to be there. So there'll be 1 day dedicated for completely MCQs and 2 days for descriptive questions, which will make the fine tuning. See, one is like These MCQs helps you in passing the examination. Descriptive questions makes you cross comfortably 70 for 80. So that is something which possibly I feel would be extremely useful for most of them. And one thing is what I want to really specify here, with a lot of people thinking that in an online classes it's very difficult to participate. I'm sure that the most people here are proved wrong. Whether it is online or offline doesn't matter. In fact, the amount of participation, the speed at which people answer. In fact, the first initial questions we said there is no need to answer, but still, a lot of people, out of that excitement and intensity, they were answering. That itself shows that it's online or offline doesn't matter. See, I think so. Again, at another session, the people have made it very interesting by a very, very interactive and very participative one. So I think we must appreciate and compliment all of them. Sometimes the internet connection may not be there. With all those difficulties, they all continue to interact and interact very, very quickly and fastly. See, some of the questions had a very, very fast answer. So I'm sure that definitely all of you can go a distance, not only from the examination point of view, but also in the taxation as a career. So I think there is a good opportunity for many of you to take this as a career. That is one of the reasons why I thought if you also hear from somebody who has actually taken this as a career and has succeeded, will also help you. So maybe we can just take another 2 or 3 questions, because so in some other chapters which like clubbing of income and all, where we haven't put any questions, maybe we can go to that for the next 5 or 10 minutes till such time the compilation of, because at the end of the day, there are a lot of people have put an effort, and definitely we will announce those people who have really got the correct answer or top 5. It's not a competition which you're trying to do, but however, that just makes it a little bit more interesting. So that's all. So I think having done this, we'll try to find out who has got it right the most of the questions in a few minutes from now. So till such time, what we will try to do is maybe next a few more questions we can take on MCQs. We'll so this is some. Okay. Karthik, if you're able to see this screen.
Yes, sir.
Yeah.
Sir, so this is out of the competition, right, sir? So I'll put it that way then.
Yeah,
so
we'll close that part of it. But see, there is nothing in, there is no competition. Just see, in an online classes, we just want to encourage, and there is some mechanism, that's all. So everybody is the winner, but only thing is that still we have to announce only few people. That's all. So let's so therefore this question they can continue to answer the question. For the purposes of this thing, it will be pretty difficult for us to include this, because otherwise again the matter will go on. So that's why we are stopping in terms of the marking. We'll stop this, but however for answering we'll involve everybody. Let's
sure. Question number 50. Hari has income dividend from domestic companies amounting to rupees 17 lakhs on 18th December 2019. He has no other income. The advance tax payable during third installment is option A 21,000, option B no advance tax, option C 31,500, option D income exempt.
So what I will do is just to take more questions for answering. What I will do is I will just try to describe this answer for this question, and let's proceed with so that we can take more questions for solving. So here is the dividend income arises on 18th December 2019. So normally advance tax is not payable. Advance tax is not payable for failure to estimate capital gains, casual income, and dividend income. So the dividend income has also been included. Here you had to pay 10% tax in excess of 10 lakhs, which is 70,000. But there is no requirement for you to pay advance tax if you're not able to estimate your dividend income. So you do not know when the company is going to declare dividends and when you're going to receive. So that's the result of it. The answer for this particular question, if there is a capital gain, the next installment of 15th March, he has to include this. But for the first 3 installments, there is no need for you to pay advance tax on this amount. So that is what has been tried in this particular question. So
question
can we move to the next one? Yeah.
Yes, sir. The tax payable by Mr. D is rupees 10 lakhs and has paid an advance tax of 1.2 lakhs in first installment. The interest payable by him under section 234C is option A 900, option B 4500, option C nil, and option D none of the above.
So basically, what has been tried in this particular question, for the first and second installment, if you pay 12% or 36%, then there is no interest is payable under 234C. Even though you have to pay 15% for the first installment, 45 for the second, 75 for the third, and 100 for the last. So if you pay 12% or 36%, the first and second installment, then interest is not payable under section 234C. So here 10 lakhs, 12% will come to lakh and 20,000. So since assessee has paid 12%, there won't be any interest. But if you pay 1 rupee lesser also, then the interest will be calculated on the entire shortfall. That is what you must also appreciate here. It is not calculated on 12% minus what you have paid. If you don't pay 12% on the entire shortfall, you have to pay 3%. But if you pay 12% or 36%, there won't be any interest under section 234C. I think so. Maybe what we can try to do is if you have any questions, if they have, maybe we can keep open. But how long it's going to take, Karthik? But I think it's also not fair on our part to hold them for such long. They've been waiting for
Sir, it's
10
ready,
o'clock.
sir. Results are ready, sir.
So yes, so therefore, I think 3.5 hours they've been very patient, and but at least I took some 5 minutes break to have some coffee. That they have not done. So I once again really thank you all for your wonderful participation. It's been always a privilege to share a lot of things with you, be it an amendment or be it an MCQ. It's just been quite fascinating, and it's an online class, and we don't. Except Karthik, nobody is visible. But with all these things, there is a great amount of interaction, great amount of participation. So very good answers. I'm extremely happy. All the very best to you. Maybe we'll just try to meet soon. And maybe like Karthik has asked them how to present. I think we should try to have one particular session, maybe for a short session, maybe for half an hour, 45 minutes, what we can try is. So what are the areas to focus on? What are the general pattern of the question paper? What you can expect? Because the strategy should be slightly different for inter and final. So we'll plan one for inter and one for final. So I think definitely we will do that, Karthik, because I think that's also a good idea. The presentation, few things the nitty-gritties will work. Of course, as I said, those who can participate, both one class on the MCQs again and 2 classes of descriptive, we can participate, and office will keep you informed about it. Now, Karthik, if you have these things, we can
yes, sir.
Announce whoever. Everybody is a winner, but the only thing is that based on what they have done, we'll just name whatever compiled by the office.
Yes,
Go ahead.
So 4th place is got won by Bhavesh Gupta, sir.
Bhavesh Gupta, from which place? Can you just put it in your in the chat box? From which place, Bhavesh?
He has got it very close to 3rd place, sir. If he has got one or two answers right, he would have been in the 3rd place, sir. Bhavesh Gupta.
Bhavesh from which place? Chennai or Bhavesh? You are there? I think Bhavesh seemed to have left, or his connectivity issue. Let's go to the next one.
Yes, sir. So 3rd place is won by 2 persons, sir. One is S. Aravind, and the next is Abhishek, sir.
Abhishek, Aravind, are you there? Abhishek from which place? Chennai? Aravind? But we seem to have lost them also. So
yes, sir. So moving forward, it is 2nd place. It is captured by 3 persons, sir. Manav Guneka, Arjun Nachiappan, and Surya Shankar.
Good. Surya, Arjun, fantastic. Manav, of course, have got a lot of answers. Terrific. Very, very nice. I think I know Surya and Arjun are from Chennai, so I don't know about Manav. It looks like a Andhra name. So Pondicherry, Arvind, very nice. Pondicherry, good. So finally, Panda, we could.
Sir, no, that is the 10 seconds lag in YouTube, sir.
Okay.
So maybe that is true. So next, we have a special mention, sir. That is Kavin Kumar. He is the only one who got the last answer right.
Kavin from Namakkal. So Namakkal is a place known for studying, no? So
So he's the only person who got it right, sir. Now moving to the first place, it is won by Balaji Shankar, sir, single-handed.
Balaji Shankar, very good. Congratulations. Fantastic show. If there, we can just. So only thing is that I can clap and it will be visible to you. But for others, even if you can just put a general. So Balaji Shankar, Abhishek, Gopalakrishnan, Salem. Very nice. Good. Manav Goenka has put Chennai. Very good. Very nice. Very nice. So thank you all for a very wonderful session, as I said. So first one from